Welcome back, guys, to a new live day trading episode. My name is Julius. I hope you're well. We are back in the S&P 500 future. I'm trading 5 micro contracts here that equals the amount of $25 per point. This is real money. This is my equity account. We'll head right into it right off the bat. Please make sure to leave a like on the video and subscribe to the channel if you're interested in regular live trading content. I upload every Tuesday and Saturday. Okay, market opens in 30 seconds. I would trade a trend opening should the market open somewhere down here underneath this point of interest. Then I might be tempted to trade a trend opening. Otherwise, I would stay in a range opening. Let's see where this candle is closing. It's getting a little more obvious. Okay, yeah, I will stick to a range opening. This is the safer side. Even though we are in a short trend, we are not opening in the fully extended trend all the way at a bottom or at a low or at a high, but in this case at the bottom. We are not opening all the way down here, but in a already pull backing market, so to say. So this is the reason why I will preferably buy the lows instead of trying to continue trading short here. So I would buy the low somewhere here at the 20. Should the market come all the way up here, I would be also happy that I did not enter a short position, and I would buy somewhere here at the 50. Currently, I would rather look to buy. Come on. Okay, I'm gonna buy here at the 20.5. This is sufficient for me. We're in with 5 micro contracts. Stop loss is gonna be set all the way down here. So this is only 2 points away. Should the market close underneath this stop loss line, that would be a sign for me that this sell-off is not over yet, and then I would reverse the position short. Until then, I would rather look to maybe trade long again. Okay, this, whoops, I deleted my stop loss. This is not what I was willing to do. Okay. So we're gonna see what happens. On the second monitor, I have the Nasdaq currently open, and it seems like the Nasdaq is in a completely different correlation, because the Nasdaq is somehow going long while the S&P is going short. Okay, stop loss is set. I'm gonna set the stop loss on the mini as well. In case it gets close, you should always orientate yourself on the mini in case you trade the micro. I really am annoyed by those micro futures because they really differ from time to time from the mini future. So I think I'm not gonna stick to the micros for long, and I'm gonna increase the position size at some point a little bit to one mini future, which would be twice the size that I'm currently trading. Yes. So this looks quite good. We get a little pullback. Let's take a look now at the footprint chart. Okay, we switched to positive delta, to bullish delta, which is a first good sign here. We got some imbalances. We're printing clusters below at the value area low, which is also a good sign. We could mark those for a second. We got some imbalances up here. So now let's just wait 1 minute until the market closes with this 5-minute candle, and then we see whether we are stopped out or if we really are about to go higher. So what did I identify here? So it's pretty simple. We have a obvious, very obvious short trend with some little pullbacks, and now we are starting to consolidate down here at the 20. A consolidation, we did not open at the bottom, but rather here at those tops. So I thought, okay, I would rather go long now, since this could look like a beginning consolidation, and then we would go long again. Not too sure about that, but that could definitely be the case. So now I want to see long momentum, and we even are flipping between the negative and the positive bar here. Come on, flip bullish again. That would be an exclamation mark here at the lows if the opening candle would be such a bullish pin bar. Come on. Okay. Doji candle in the mini. Look, in the micro, it's even one tick bearish, but it's a doji in the mini. But this is a first good sign, okay? This is a good start here for today. For sure. We entered a position, we are in a little profit. Should we be stopped out, so be it. Until now, I'm quite optimistic that I would rather stay long, okay? And also this candle will for sure lead to new buyers come in, okay? People waiting for the first 5-minute bar, saying, okay, what's going on? Okay, we're consolidating down here, and we even printed a sort of bullish pin bar. That would be the first sign. It would be important that the correlation between the Nasdaq and the S&P would work and would get along again, because right now it's not on the same side. I'm going to delete this point of interest right here because the opening strategy is, so to say, over. We entered, We did our job, we set a stop loss. Now we are at a complete different point where we are not looking to enter at a specific point of interest, but we rather go along with the market. And so far, I'm very happy that I entered long. This could all change. Should I have traded a trend opening, I would probably have gone short around here where the market is now. Around the 25, I probably would have gone short. Since this is the last pullback, market opened, let me remind you, right here at the 23. I would have probably gone short here at the 25 to seek a continuation short. But I did not do that. Why? Because we did not open in a extended trend. Okay, let me draw that for you. We did not open in a extended trend all the way at the lows. Okay, could have also opened at least somewhere down here. Okay, it doesn't need to be the overall low, but somewhere in the lowest point of this extended trend. But we did not do that. Instead, we already started a little consolidation and opened after a more significant pullback. This is a fine line in deciding how I want to enter here. Do I want to continue trading the trend, or do I want to see this as range and continue trading the range with buying the lows? This is my strategy. Okay, you could very well trade that different, but I thought, okay, we already made a significant pullback here. I rather would like to stay on the safe side. I could still enter short should we break the lows again, that I would flip the switch short, but for now I feel better going long first. And as you can see, okay, it seems like this point really acted as a resistance, and currently the sellers are coming back in. So as I told you, maybe we're gonna be stopped out. Everything is possible here, but I wanted to be on the safe side first. I could still enter short, but if I would have entered a trending short position here, I had to set a stop loss somewhere above. Okay, the lowest point would be here. Better point, a more safer stop loss would have been all the way up here, and that would be like a 25 point stop loss. That is extraordinary big. So I wanted to be on the safe side, start with a long position. We could still enter short, flip the switch here should the market break lower. Okay, so what did we see here? A little failed breakout for now. We made a little range, a little consolidation, broke out, tried higher prices and failed, and went back into this range, back into the consolidation. That is not a very good sign, but still everything can change. Delta is still bullish in those 3 consecutive candles, even though the last candle was more or less bearish or undecided, and this one is bearish currently as well. The delta is positive. What does that mean? Very, very simple. The active side of the market participants are buying. Okay, the delta is the difference between the active market longs and the active market shorts. So all the people pressing the buy market button or by entering with stop positions, those are the active market participants. Okay, and they're in the difference definitely bullish. Okay, a lot more people actively buying than selling. Why is this candle still bearish even though the active market participants are buying? Because there is the other side, the passive market participants. They have passive liquidity in the market by limit orders. Okay, so a limit order, I can only set a limit order long underneath the current market price. Okay, so same goes for limit order short. I can only set a limit order short above the current market price. So once the buyers, the active buyers, which leads to this bullish blue delta, are buying the market, trying to go higher, the passive market sellers put in their limit orders above the current market price and providing liquidity. And should the buyers now, let's say this candle is still running and this is the current market price, the buyers come in here, bullish delta, try to buy higher prices. The passive market sellers put in their selling orders above that, and should the buyers now try to go higher, they fail. Same might be true here. Active market buyers try to push this candle higher. Passive limit orders are being put in above, acting as an obstacle and hindering the active market buyers to push higher. So how could you resolve the situation, or how could the market resolve the situation? So either first, there are so many active market buyers that they buy away all of this sell liquidity, all of those sell limit orders, and are able to push higher. So they activate every sell and still push higher, and so to say stop them out eventually. That would be the first thing. Or the sellers are strong enough, the liquidity is so huge, there are not enough active market buyers to fill out all of this sell liquidity, and in the end the market will decline. Those are the two possibilities we're gonna see now. And we can definitely say we are still into the consolidation. That is, for me, still a bullish sign. We're still into the consolidation. We did not break lower yet. So maybe this is a turning point for the market. Still, we got this more or less bullish pin bar with a big candle wick. So this is all looking bullish to me. Now the question is, as I've told you a second ago, if we are able to really fight against the sell limits that are gonna be put in here. Okay, now the delta isn't even that bullish anymore. That means there are also a lot of active market sellers now shorting the market actively. Okay, so this is a big obstacle for the buyers to overcome here. Okay, as long as we are in this consolidation, it kind of looks good. Also, after such a big sell-off in the European session, if we want to go higher, there might be the need for some bigger consolidation to really convince all of the market participants that the selling power vanishes and the sell-off is gone and finished. You know, it's always the same, at least most of the times. After you get a very strong bullish trend, you might need a longer, bigger consolidation before you can go short again. And the same is vice versa for now. This short trend, we get a big short trend and we might need a little longer consolidation to go up here. Why do I explain all of those things? Because despite me having a fixed strategy, I'm not gonna act on my analysis of the delta, of the footprint, of the consolidations. I'm not going to act on that. I have a fixed strategy that only looks on the previous candles, and now this candle is being sold off again. Doesn't look too good here anymore. Gonna close in 10 seconds here. Now the Nasdaq is pretty bullish, so hopefully the S&P can follow. So we're gonna close here. This is an okay close still into the consolidation. I'm not going to act that. I have a fixed strategy, but I want to understand what's going to happen and what is happening currently. I want to understand it despite having a fixed strategy. I will not act on it just because I see a consolidation. I wouldn't buy here, but I entered a range opening here. This is on what I'm acting on, but I think it's important to understand what's going on. Okay, enough talk. Hope I could explain some things here to you. This is not particularly the reason why I acted like I did, but it's just what's going on here now. Do you need this? No, not particularly. But I want to understand what I'm working. Okay, I want to understand my business. And in the market, it's really hard to understand why the market is moving in a specific direction. Could have been 1,000 reasons. Remember, we're trading futures here. So the underlying asset is the S&P 500 index consisting of 500 stocks. Of some of them stocks currently are riding red numbers. Then the future will fall as well. So it's not always a technical part, okay? It's also like what the underlying asset is currently at. So there could be 1,000 reasons. The Nasdaq going higher, the oil prices changed, the currency prices changed, some news. It could have been 1,000 reasons why this market is behaving like that. But I try my best to at least understand this technical part, the technical side, okay? What we're gonna see here in the charts. And this explanation is also the reason why I am not the biggest fan of trying to understand where the market will go now and act on that. Because in my opinion, there could be 1,000 reasons, some news, some stocks change, everything is possible. It's not always the technical side, and it's not always the volume, and it's not always the heat map, and it's not always the footprint chart, okay? So I have a fixed strategy that seems to work over time, and I will abide by that, because there could be so many reasons why the market is moving, and I would not like to predict if the market is going long or short or sideways or whatever. I'm not a guy who's predicting that. I still want to be on the right side of the market. That is my approach. And if it's in a range, I want to first continue trading the range. If this does not work, I will stay with the trending side of the market. And if the market is opening already in a trend and I do not have a range to trade in, then I will trade continuing with the trend. That's just my approach. Continuing doing what the market did before. That is the only thing that I can influence, because seeing what the market did before and continue doing that is the best chance I have for making money here. I'm not predicting what might happen next, okay? That's also the reason why I don't... people complain why I'm not using any indicators, but it's the same if you use indicators. An indicator will show you what happened before, and you make an assumption, okay, then I might act on it. That's the same I do. We all act if you're trading technical analysis like I do and you're not a news trader or something. But even a news trader might act on news that previously happened. But especially if you're a technical analysis trader like I am. I'm like the most extensive form of a technical analysis because I'm just looking at the blank 5-minute chart. And if you're like me, we only have the past to make a decision about how we should trade the future. So I would just like to stay on the trending side of the market, and we can make a cut here. We can say until, let's say, 8:30, somewhere here Europe opened, and somewhere here, whoop, this is completely wrong. Okay, somewhere here US opened, and we just analyze it. If I would trade the European session, which is most of the time in a range failing to break out, today we got a trending European session. If I see this and I would trade it like here, I would probably just say, okay, first thing I'm gonna do is continuing trading short because we are in a trend. Okay, if I would use my strategy and I would want to enter here, I would probably see this as a range first, think, okay, I'm gonna sell those, buy those, and then maybe fail to my long position would have failed and stopped me out, and I would only then enter short. But I want to continue with the trend. And now in the US session, it's a new picture. Okay. And if I would just see the US session now, as we're building bullish bars, I would probably seek to enter long, which for now is working very, very good. Okay. And of course, you're going to find 1,000 structural points. You're going to find 1,000 resistances, 1,000 supports. Depends on how low your time frame goes. Okay. In the 5 minutes, we can find 1,000 things. I can mark those tops. I could mark those. I could mark those lows. I could mark those tops. What do we have? I could mark those. Oh, we got here some, here. Okay. I can find 1,000 supports and resistances. And all of those previous resistances here now acted as support during the European session where the market declined. Market still declined, even though you can find 1,000 things. Oh, now I have to delete all of them. Oh gosh. Now I have to delete all of them. Okay, let me just delete it. Okay. So this is also the reason why I'm not trading resistance and supports particularly, because there are two options. The support or the resistance, or 3 options. First thing, you have to get it right. Okay. I assume that we mark the right support and resistances. Okay. Second thing would be market is acting according to our expectations, respecting support, respecting the resistance. Third option would be markets just breaking them, moving along. Guys, there are so many different opportunities here. I will stick to my approach, and this video should not, in any way, convince you to trade like I am. Definitely not. I just want to show you what I do, and maybe it differs a little bit from all of the other traders, and it's just, see it as some entertainment, guys. Don't take it too seriously, okay? This is real money, this is not demo. I am supposed to grow my account and I'm responsible for my money, okay? You have to be responsible for your money, you don't have to be responsible for mine. I do the care of that. And I think we are now only like half an hour into the trading session, but I talked so much that I will probably look to end today's trading session. Okay guys, I waited now a couple of more minutes and we are here at the major structure point. This could take a while, market could reverse. We are almost at $300 profit. So I'm gonna end today's live trading session here. Everything looks really good. I could just close the position. We would have been into a $270 profit. It could take that and walk away. I'm not doing that. I'm a day trader. I will hold on to a position until the end of the day. For now, it's this long position. This could take a while here at the structure point. We're probably gonna see some retracement first, stuff like that. This is the reason why I'm gonna end today's session here. Hope you enjoyed it. Hope you could learn something. I'm quite happy with the results so far. We are trading for 40 minutes, $250. That is quite good. Now we're going to see the first retracement. I'm going to end the session right here. We'll see us in the next episode. Take care of yourself. Leave a like on the video. Subscribe to the channel. Hope you enjoyed it. We'll see us in the next episode. Until then, bye bye.